Hey everyone, it's Nathan. I've had a lot of interest over the last couple of weeks, months I guess at this point, for my book, Dividend Growth Machine, and I promised a lot of you that I would send you a free PDF copy of that or Kindle copy, and I've had an overwhelming response to that, and I have not been able to keep up with all the requests. So first of all, I apologize for that. If you have not gotten a copy of the book and you would like a copy in PDF or Kindle form, I've put a link in the description that you can go in and download those. But today I'm also announcing the release of this book in audio version. I'm actually going to publish the audiobook that's currently available on Audible. I'm going to go ahead and post that for free on YouTube, so you guys can listen to that on your way to work or wherever it's convenient for you. It's about an hour total listening time, and I'm going to post each chapter as its own separate video. So if you want to, listen to that a little faster, you probably know this already, but on YouTube you can go down to the little gear icon in the bottom right, and you can set that to 1.5 times or 2 times, and it will speed up my voice, so you can listen to that. And one other thing before we start the introduction to the book, I did want to note that the images are not going to be shown on the video. I'll probably if these are popular enough, I'll update the video and maybe put some images or something in there as we go. But for now, I'm just going to do the Audible book version only. And if you want to see the images along with it, you can download the PDF and take a look at those as we go through it. So I apologize for that inconvenience. I just don't have the time at the moment with chasing the kids around to put those on there. So anyways, I hope you guys enjoy the book. And so here we will start the introduction, and it should automatically play the next video, which will be chapter 1. If it doesn't, you can go to the channel page. I'll put a link to it in the description, taking you to the playlist. The playlist will go through each chapter in order, so hopefully that'll be a little bit more convenient for you guys. But and the last thing before we start, I know I've said that a couple times now, but I did want to just say I really appreciate all of you. I've been honestly blown away by the support and the comments, and just how quickly this channel has grown. I've just been really just blows my mind how many people have subscribed in such a short amount of time. So again, thank you all so much for that support. I really do appreciate it, and I really do value each and every one of you as viewers. So if there's anything I can do for you to help you along the way, feel free to leave a comment in the comment section, and maybe I'll make a video about that in the future. But without further delay, here is the introduction to my book, Dividend Growth Machine. Thanks for watching. Introduction. Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. Paul Samuelson. This book will take you approximately 73 minutes to read from start to finish. I believe these could be the most valuable hour and 13 minutes of your life, financially speaking, that is. I want to introduce you to the most powerful investment strategy of all time. No other investment approach combines consistent returns with below-average risk and simplicity. With this strategy, I believe you will be able to improve your future investment results by at least 1% per year. What would an additional 1% mean for you? If you invest $1,000 per month for the next 30 years, an extra 1% return is worth about $185,000. If you are starting with $500,000 today, an extra 1% would be worth $1 million in 30 years. Since this book is only going to take you 73 minutes to read, you're currently on track to earn at least $2,534.35 per minute. So kick back, relax, and enjoy. The sad reality for the average investor. From 1871 through 2016, the stock market produced a compound return of 9.07% per year. That's enough to grow $1 into $319,492. From 2009 to 2017, the U.S. stock market, as measured by the S&P 500 index, has increased in value by 260%. That's a 15.3% annualized return. Most financial advisors will tell you they expect the same return to continue into the future. However, I wouldn't count on it. The combination of ultra-low interest rates, ultra-easy monetary policy, and low inflation have allowed stock prices to outpace underlying earnings and dividend growth for years. In the future, returns are likely to be more muted, far less than the 15% per year we've enjoyed since 2009, and probably worse than the market's long-term 9% return. According to Vanguard, U.S. stocks are likely to produce between 5 and 8% per year over the next decade. Bonds are likely to produce between 2% and 3.5%. If you followed the traditional balanced fund of 60% stocks and 40% bonds, your return will be between 3.8% and 6.2% per year. That's before fees and, more importantly, before investor mistakes. Fees. Let's talk about fees for a minute. Most Americans invest in actively managed mutual funds. The average mutual fund charges 1.2% per year. That's not including any additional fees, which include sales loads, 12b-1 fees, commissions, or other charges. By the time you subtract management fees, the best case annual return for most investors is between 2.6% and 5% per year. However, investment fees aren't the most important factor in your future returns. The biggest issue you face as an investor, it's looking you right in the mirror. Behavioral mistakes. Each year, research firm Dalbar releases a study of how actual investors are doing with managing their own portfolios. The average equity investor did worse than the S&P 500 by approximately 2.9% per year. According to Dalbar, the biggest enemy to investor returns is not fees. Of the 2.9% underperformance, only 0.8% was directly attributable to management fees. A whopping 2.1% per year was because of their own investment mistakes. Investor behavior is not simply buying and selling at the wrong time, it is the psychological traps, triggers, and misconceptions that cause investors to act irrationally. This irrationality leads to buying and selling at the wrong time, which leads to underperformance. Quote from Dalbar's 2016 Quantitative Analysis of Investment Behavior. If we assume the average investor repeats this performance in the future, we can subtract another 2.1% per year off of the 10-year returns projected by Vanguard. That gets us somewhere between 0.5% and 2.9% per year. Inflation. A return of 0.5 to 2.9% per year for 10 years isn't great. Once we consider the impact of inflation, things get even worse. At the historical inflation level of roughly 3%, investors are likely to grow their wealth at between negative 2.5 and negative 0.1% per year for 10 years. Yikes. That's troubling for investors accumulating wealth, but it's especially troubling for retirees who are actively taking money out of their portfolios to pay bills. At the industry recommended 4% withdrawal rate, it's entirely possible that if you are retired or will soon retire, your real investment value after inflation will decrease by 4% to 6.5% per year for 10 years. Assuming you've got another 30 years to live, that could be some severe damage to your nest egg. I don't want that fate for you. By adopting the dividend growth investing mindset, you can significantly improve upon the returns most of your friends, family, and neighbors will get on their balanced mutual funds. Dividend growth investing, the boring, predictable path to wealth. The strategy I will outline in this book is not the most exciting. There are no complicated math formulas to follow. In fact, anyone that has got beyond junior high school has already conquered the complexity needed to follow it. There are no revolutionary stock picking techniques here. It's not a get-rich-quick method. You won't see any TV ads about it. You don't need a PhD in finance or a fancy MBA from Harvard. In fact, those things might get in your way. After all, Wall Street tends to take simple things and make them complicated. What the strategy lacks in excitement, however, it makes up for in practical application and results. This strategy works if you apply it over many years. Slowly but surely, this strategy will grow your wealth consistently and predictably over time. If you're looking for investments that will double overnight, this book isn't for you. It's not about picking the next Facebook, Amazon, Google, or Netflix. This book is about investing in real companies that make real money. It's about focusing on long-term results rather than short-term price changes. Unlike most of Wall Street's gibberish, this strategy is simple, logical, and easy to understand. It's the most boring, predictable way to build wealth investing in common stocks. It's better than savings accounts, hiding cash under the mattress, bonds, and annuities. It's a way to safely withdraw money throughout retirement to ensure that you never run out. If that sounds good to you, then I hope you will join me. You've already endured 5 minutes, only 68 more to go.